Now it's time for Formpipe and CEO Christian Sundin. You're welcome.
Thank you, Fredrik. So where do I have the audience? Is it over there? Yep. Hi, everyone. I'm Christian Sundin. I'm the CEO of Formpipe. Been so since 2007. And I will walk through this agenda today. I will very briefly introduce the ones who are new to Formpipe, what we do, what sort of value we provide to our customers, and what sort of business we are. I will also have a short introduction to our new growth strategy that we introduced earlier this year, and then I will lead into evidence that the growth strategy is working by having some Q3 highlights and dig into those. So Formpipe, at a glance, we are a software company within the space content services. Content services, that's the definition by Gartner and others, and it's to mention it in a very simple way, we are bringing order and structure into digital information, documents, cases, and so forth. And we're also communicating, helping other systems to communicate with their customers in a better, efficient way in terms of documents and other customer communication. Our roots and legacy and history starts we evolving from the public sector space. Actually, in the public sector, in terms of good structure and order on digital information, public sector are front runners, mainly due to laws and regulations from governments, such as registry needs and so forth in the public sector, and we have our history in that. But nowadays, we also have approximately a third of our turnover towards the private sector, who we address by an international partner network and driving our sales that way. We are today 276 employees in mainly Denmark, Sweden, and the UK, but we also have sales people in US and Germany. And on top of that, we have our product development offshore through a partner in Ukraine, and that's an additional plus 60 people, a little bit volatile depending on fluctuation in where we have R&D needs. Looking on our numbers, we had last year, 2020, a turnover just about 400 million, whereof 250 million of that is recurring revenue, so quite a big portion of recurring revenue in our total revenue. Have had increase in margins for a number of years and had last year a margin about 25% on EBITDA level. We're listed on Nasdaq Stockholm under the abbreviation of FPIP. And the market cap today is approximately 1.7 billion Swedish kronor. However, as you see, we looking on the graph here, you see that the growth is perhaps not that impressive looking back to 2016 in percentage-wise. And why is that? Yeah, we are in a transition where we see a rapid shift towards SaaS. So our traditional license sales is the curve you see on the right side here, trailing downwards from yearly levels on around 75 million a year down to latest quarter just above 35 million a year. That is 40 million plus coming right out from the top line over this period from 2017. On top of that, we have also deliberately, in accordance with our strategy, avoided to grow delivery revenue where it's not necessary for growth of the recurring revenue. So our focus and our strategy has been to only grow the recurring revenue. And that we have done quite well, actually. We've had a 10% growth every year since 2014 of the recurring revenue in our business. Supported by, of course, the shift towards more and more SaaS, and we're offering SaaS as the more or less the only way to buy our software, apart from in some tenders to public sector and some customers that really have a strong need for buying it on-prem or traditional. That was the crash course of Formpipe and our history. Coming to what I mentioned, the new strategy for growth that we introduced early this year. We said, yeah, we've now delivered and executed very well on the strategy we had, improving margin and growing recurring revenue. So we've done that for a number of years successfully. We now saw that, yeah, we have a platform of plus 60% recurring revenue, stable customer base, growing recurring revenue. Let's push the throttle a little bit more and increase the speed of our growth with stable finances and a good position to go for that, and strong markets as well. So we have now started to focus on accelerated growth, both in Europe and in the US, mainly investing a lot in our partner network internationally to support that partner network with more technical resources, sales support resources, and so forth, making our partner network successful in always adding our products to their offer towards the end customer. We have a high share of recurring revenue, as I already mentioned, as a foundation, and we will also and are also looking for acquisition as a complement to our organic growth in this strategic journey that we're on. We have slightly different strategies between public sector and private sector growth. In the public sector, we are the market leaders in case and document management in both Sweden and in Denmark. We have a fairly high market share, and thereby the growth in those markets is mainly to increase the presence at our customer base and help our customer base to take the next steps on their journey on digitalization, getting out with e-services to their end customer, i.e. us, the citizens of Sweden and Denmark. We see that this is quite a generic, the case and document management platforms. They're quite generic in what they do. They're either from us or from competition, and they are very competent platforms. So the growth is actually taking the next steps on the journey on digitalization of the society. And that goes all across Europe, even though Denmark are a true front runner in digitalization of the public sector, but Sweden is not far behind. And then we have a lot of other countries where our knowledge, skills, and products will serve well. But we see going out to other European countries in the public sector space will mainly be through acquisition of present players in those local markets, and then upsell the products that we build on top of the repositories, the core platforms. So that's our strategy in public sector space, and we see a healthy, good growth in that area and executing on that strategy. When it comes to private sector, yeah, I already touched based on it. It's through an international partner network that we're really driving this, and we are, I would not use the word piggybacking, but we are really gaining on the growth journey and the success that the platforms Microsoft Dynamics has in the market space and the banking system Temenos. And we have close relationships and partnerships with those two vendors of their software, and we are adding a complement to their platform, making their platforms towards their end customer and their partner network even better in terms of accessibility and not look and feel on documents and customer communication in that. So we are heavily investing in resources to support these two vendors on their journey of growth. And we are only promoting SaaS growth in this. So we're offering our products as a service in their partner network. This all sounds jolly good, but of course in ramping up capacity it costs money, and the cost comes immediately with recruiting more resources, while revenue comes slightly later. So 2021 will be and is a year of investment. Focus on Microsoft and Temenos, as I just mentioned. Continue to focus on excellent deliveries to our current customer base, both in private and public sector, but it will have a negative impact on short term on the EBIT margins now in 2021. Together with the new growth strategy, we also published our financial targets for the next coming years. We will have an average annual revenue growth on 10% over the coming years up to 2025. Reaching 2025, 70% of our revenue will be recurring revenue, and by growing the SaaS revenue as a bigger and bigger portion of our total revenue. And even though we will take a hit on the margins short term, due to the scalability of software business and SaaS revenue, the EBIT margins will come back. And in 2025, we will be above 20% in EBIT margins. And yet again, through the scalability and the way SaaS contracts are sold and how the cash flow is upfront to a large extent, we see that this is a cash-generating business when we also generate profits. Thereby, it should be possible to combine this growth journey with paying dividends to our shareholders. So, the latest published results we have is the one from Q3. So we want to check in and see how is this growth strategy working out for us. Yeah, we have added another 31 employees during this year alone, so ending up at the quarter Q3 on 276. As you can see, we started way below 220 a year ago in 2020. So we've added a lot of capacity to support our partner network and our end customer base. In terms of growth, yeah, year-on-year comparison, we are growing by 10% compared to Q3 last year. We have a record high ACV in Q3 and Q2 actually on 9 million for those quarters. And that's a new standard, a new level of ACV that we have not been able to achieve before. And when it comes to Lasernet, the product that is mainly sold as the complement product to Temenos and Microsoft Dynamics, we actually see an 18% growth thanks to the increased resources we have to help our partner network making this business even more successful. And the real show-off slide here in my presentation, as I said, we have reached a new level of ACV. This is the multi-year comparison, quarter by quarter on ACV. You can see it all the way from starting the total SaaS ARR going into 2017 on slightly about 10 million Swedish. And we're now exiting Q3 with 78 million in ARR, but mainly the circle around what has happened during this year with the increased resources, where we come from several years in a row where decent ACV numbers of 2-3 million per quarter in ACV now has become 599 the three latest quarter. So yeah, I would say it's fair to say that we are successfully executing on the new growth strategy. And we feel great comfort in that we will reach our financial targets that we set out to deliver. Thank you.
Thank you, Christian. And you've touched upon it, but I want to ask you a question about it as well. You have different strategies in your public sector compared to your private sector. And in your public sector, you think it's good to have delivery consulting capacity, while you don't think that's a good idea in the private sector. And could you explain, as you have both types of strategies, I mean, when is it a good idea to have consultancy and when is it not?
Well, we see, I mean, first of all, in the public sector, we're market leaders. We know the name of every potential customer and current customer in that market. So it's a well-fenced market we're looking at to provide the value we do with our software to those markets, both in Denmark and in Sweden. And being close to that end customer base is of relevance to find new innovation. What is the next step for a customer in the public sector? What do they need help with in the future? So we can build those things, those products, and then address it to the entire market. And having delivery, being on site with your customer makes you receive that information earlier, and you can be time to market with those upsell opportunities will be endorsed by such a strategy on those. So a well-fenced market, you know all customers, you can provide services, and the customers really want to have the services provided, but also by the software supplier. However, in Sweden we have a sort of a mix. We have partners in Sweden as well, and there's plenty of work to do with services helping public sector to move upwards on their digitalization journey. When it comes to private sector, where we address the market globally with global vendors, we could of course have a strategy also there to drive that with delivery. We believe it's much faster, more scalable business model to go for a partner network, and it's been really successful for us so far. And we would like to take on more partners and help the partners we have to go even faster. So I think the markets and the end customers are very different between our two sort of end customer bases, and thereby different strategies that suits the different market needs or the customer bases the best.
Okay, interesting. And I want to ask, one of your fastest growing products, LaserNet, is typically sold as a plug-in or add-on to Microsoft and Temenos. What are the pros and cons with being a plug-in to those large systems?
Yeah, of course, the marketing, the lead generation capacity of a player such as Microsoft is great to have. I mean, if you go into Microsoft AppSource, which is their sort of store for complement products to their products, and searching for customer communication management, the first and the top hit in this is our product LaserNet. And if any system integrator goes in there and search for that and look at LaserNet, yeah, we will immediately get that information, knowing that this is a partner or end customer looking for a customer communication management software. So we get great lead generation in that way. Then it's up to us to do the sales work anyway, and help that, and we need to sell ourselves to that partner. That partner should bring LaserNet along in their offering. So that's a great advantage of sort of following their success journey. The con, if there's any, I mean, we will not sell LaserNet as a standalone product. If the end customer does not choose Dynamics, Microsoft Dynamics or Temenos, neither will they choose LaserNet. Then they buy another ERP system, and then it's probably another complement product for that, because the partner network we're having is focusing on Dynamics and Temenos. So our success is dependent on the success of Temenos and Dynamics, as it is. LaserNet works for all ERP platforms actually, but we don't have a cutting edge and such a close relationship as we have with Microsoft and Temenos.
Okay. You show us a graph of the ACV or the ARR growth, and I mean it's a significant improvement during the last few quarters. Why now?
Well, I would say that there's two answers on that. One is of course increased resources, more feet on the ground, more support to the partner, more confidence from the current partner network to add LaserNet into every deal, rather than there's some more of everything leads to more sales. That's one. But we also made a very, very successful acquisition this summer of 2020, where we acquired a partner and instantly gained 30 more employees with skills on Lasernet and other complement product, Autoform, that we are now bundling with Lasernet. And that also gave us a door opener even closer into the Temenos. And while Temenos has been having Lasernet in many installation and businesses for many years, now we have a much closer relationship. Now we're having much more people that we know within Temenos, and also the company we acquired had an on-premise or traditional license business model and want to stick with that. We instantly shifted our pipeline to address and support a SaaS business model instead. A SaaS business model instead, of course, drives better ACV than a traditional license business does. So that's also but we really gained traction in that relationship. And comparing a year or so back in time, we have multiple the number of Temenos deals that we are running through our business right now or winning. Yeah.
Okay.
Yeah.
Thank you very much. Our time is up.
Okay. Thanks.